This house that you guys are looking at behind me has just undergone a massive price cut in the order of $300,000, guys. That's right, you heard me. They just lowered the price of this home in October by 300 grand. When they first started off trying to sell this house back in summer of 2022, they were asking a whopping $3.7 million. Fast forward to today, and now this house is down to $3.1 million. We're talking a $600,000 price reduction between now and then, and they bought this house for close to $1.5 million back in 2021. So yet it's another flip and they can't sell it. This is like the story of Miami right now, okay? All these high-end properties that people thought that they were just gonna buy and turn around for big money, it's not happening, guys. They've been trying to sell this house for a year and a half, basically, since June of 2022, when they first tried flipping this house, okay? Unsold. And by the way, when they first listed the house, they listed at 2.9 and then thought it would be a good idea to jack up the price to 3.7 million and gradually lower it from there. Meanwhile, this house has been sitting empty all this time. Empty house like that. This is just crazy, you know? Is this person gonna make any money? I don't think so. But I know who's really trying to make some money right now, and that is the mortgage brokers. Because one thing we've been covering here over and over, guys, is how big a trouble the mortgage industry is in right now. Every week, I get these emails from Fairway Mortgage about all the different things that they're trying to do, all the financial hula hoops to try to get people into homes. Well, the state of Florida right now is still subsidizing home buyers, okay? This is becoming kind of a big problem, guys. Like, some people can look at this as a good thing because it helps home buyers get into homes, but at the same time, it keeps the cost of housing continuing to go up, is what it really does. Because we have something here in Florida called the Hometown Heroes program. And so this was a program that got rolled out back in July of this year, and it ran out of money in the first week, okay? They allocated about $100 million to this program to help people get into houses here. And at first it was aimed at just police and firefighters and teachers, government workers here in Florida, but then they expanded it to everybody, pretty much overnight, okay? It was supposed to be just for them, then it got expanded to everybody. If you live and work in the state of Florida and you have 150% or less of the area's median income, you could qualify for one of these homebuyer grants. And so that ran out of money practically overnight. Now we have round 2 of stimulus to this housing market, okay? To the tune of 36 million this time. So only a third of what we got last time, but of course you got Fairway Mortgage trying to get people into this because they want to get their share of the pie. Here's what they're saying this time. Tip of the week, Hometown Heroes is back. $36 million in additional funds are being added Monday, November 6th. This gives the buyer up to 35 grand towards the down payment and closing costs, enabling borrowers to closing with less than the cost of the first, last, and security on a rental, all at a low rate of 0% because they're giving you this money for free. At Fairway, we do everything in-house for Hometown Heroes. We underwrite the entire file from the beginning to the end, use our own funds to close the loan. You do not have to worry that your buyer's loan will be brokered out and subject to unfair conditions, impeding your way to closing. We have closed tens of millions of dollars worth of Hometown Heroes loans and will continue to be one of the quickest to get you to the closing table without headaches. So like I said, Fairway Mortgage wants to get their chunk of this pie before it's gone. And there's a good chance that by the time you see this video, the money's already gone, guys, because the last time this happened, like I said, the money was gone in the span of a week. Now it's only a third of the funds that were originally available. My guess is it's probably already gone as I'm recording this. But look at what they're doing. They're giving people 35 grand or up to 35 grand. It's not like everybody will get 35 grand, but that is a massive chunk of free money to buy a house, okay? You're talking about people that got money from the federal stimulus program when it came to getting the stimulus checks and maybe some unemployment money. That's nothing compared to this, okay? And so the more people that continue to get this free money, the higher that home prices will continue to go in Florida because people that can't afford to actually buy a house are buying them, guys. This is just another way of propping up the market and allowing people to enter the market right now at all-time highs with high interest rates, even though they technically can't afford it, because if they could, they would have the down payment themselves. Now, I've already heard from a few of you guys before about how these sort of programs and zero money down programs or low down payment programs have helped you get into homes, and now you have a paid off house. So that's great for the people who are actually able to pull that off, but unfortunately, this kind of reminds me of a situation where, you know, mom and dad buy the kid the brand new iPhone and oops, I dropped it on the floor, the whole thing's cracked. Well, I don't care, I didn't have to pay for it. This is the kind of the same mentality, unfortunately, I think a lot of people who get these type of loans will take towards this buying process, because they're basically getting into a house with no money down. It even says here in Fairway Mortgage's email that you can close on this house for less money than it would cost you to move into a rental. Does that ring a bell? When was the last time you heard that? Oh yeah, 2008. In fact, people back then who didn't qualify to move into a simple rental were qualifying to buy homes. And that's exactly what we're seeing right now, just in a different version of it. Because this time, it might not be about your credit, it's about the amount of money it costs to actually move into a rental versus buying a house. If you get to be one of these lucky lottery winners that get this Hometown Heroes money and you move into the house for less than it would cost you to move into a rental, guys, in what world does that make any sense? Okay? And why would they be doing this, right? What's the motivation for the Florida government to continue subsidizing home buyers here, right? I guess they must have a vested interest in keeping these property taxes sky high like we have here throughout the state.
3-bedroom, 2-bath, $1.95 million, and about a $13,000 per month mortgage payment if you can afford it. Oh yeah, they have a pool too. It's a flip. They just bought it literally 1 year ago for $975,000, and now they're saying it's worth an extra $1 million because they did a little bit of work here and there. Well, I feel sorry for whoever buys this house, because the ink is not even dry on the previous contract, because the property tax bill hasn't even gone up yet, and somebody's going to pay double for this house. Have fun with that, guys.
Now, when they came out with the first round of this $100 million, it says here that it helped 6,400 families purchase a home, guys. That's a lot of people buying a house. I mean, imagine where inventory is at right now. You're talking 6,400 additional closed sales that we might not have seen otherwise if people didn't get this money. So how is that not artificially stimulating the housing market? It absolutely is, 100%. And by the way, who's paying for this? Regular taxpayers here in Florida, people that didn't get help to buy the house. You know what? I didn't get any help, guys. All the real estate I've ever purchased, I've never had a single dime, a single 1 penny help from the government or a job, anybody, okay? It's just me and my wife saving money, working hard, buying property, okay? And of course, they're telling you to apply for this sooner than later before the money runs out, which, yeah, no duh. And you know what, guys? If you want to go and apply for this, I'm not going to knock you for it. Definitely go and get the free money if they're giving it out. I'm not telling you not to get it. Definitely try if it's something that you want to try to do. But just know that this is not the way things are supposed to work. And this is why all these numbers that we're seeing in today's economy, to me, are completely false, because it's all being distorted by these programs. But I think a lot of people are going to get smacked with reality when reality comes and smacks them in the face with higher property taxes, higher insurance than they ever thought possible, and higher costs of maintaining a home than they ever thought possible. These are all real world things that many people are facing right now. And, you know, just look at California right now, guys. I mean, this is a problem in Florida, but California this week just lost more insurance coverage, okay? Farmers Direct Property and Casualty Insurance, they just withdrew their certificate of authority, which allows them to operate in the state of California. So they're done. They're completely pulling out of the state, and they're getting rid of all policies, including homeowners insurance, autos insurance, and renters policies. And this is a subsidiary of Farmers Insurance, and they're all going to be getting offers to move to other subsidiaries of Farmers Insurance. But some people might be unlucky and not get a renewal offer at all and have to find coverage elsewhere. Farmers Direct, they gave up their certificate of authority on September 15th this year in California. Even though they're allowed to continue servicing existing policies, they're not going to be writing any new policies there. And this affects a lot of people, guys. guys, just to put into perspective, for Farmers Direct, they had about almost 58,000 auto policies and about almost 20,000 homeowners insurance policies that are now going to be canceled, or they're going to have to find somewhere else to get the policy from. And obviously it's not just California, they're just in the news this week because this is now happening today in California, but it already happened earlier in the year with Allstate and State Farm. They pulled out of the state of California, and also we have the same problem happening here in Florida as well. And another one that kind of snuck under the radar is there were 4 small insurance companies that are part of Kemper Corporation. Never heard of this, but I don't know which insurance companies they're referring to here. They also revealed plans recently to exit the state of California, but they didn't say why. They didn't say it's because of wildfires or earthquakes or whatever. They're just saying we're not writing policies here anymore. So if you're with anybody under this Kemper Corp, starting in 2024, you're going to be getting a non-renewal if you're in California. There's a lot of major changes happening in the housing market right now, particularly when it comes to the cost of ownership. That's kind of like the biggest change that we're seeing right now, and that's squeezing people, guys. And people who are jumping into getting this free home buying assistance, that's great. But you got to understand that that's just one small piece of the puzzle, guys. I'm not telling people not to do it. Like I said, if you can get your hands on it, by all means, get it, you know. But understand that once you own the home, there's going to be many more expenses to come along with that you're going to need to be prepared for. Now, how about this for change? Interest rates are thought to be stuck where they're at right now. People are saying that the Fed's not going to do any more interest rate hikes, and at some point next year they're going to start cutting rates eventually. This week, the Bank of Australia actually increased their interest rates, and the reason that they decided to increase rates was because of inflation. Sounds familiar, right? Now, obviously this was in Australia and doesn't directly mean that this is gonna be a problem here and that they're gonna have to follow the same course. However, the Bank of Australia did 4 rate pauses, just like we've already done 2 here in the US, before they now decided to hike rates once again. And we could be following that same blueprint very soon, since we've already done 2 pauses. If inflation continues to go up, we're gonna get another report soon for October's numbers, and this is going to be a telltale sign of where they're going to be going next with this. And if the jobs reports keep coming in hotter than they want to see, I think it's going to be almost a guarantee that they may hike rates once again. Neil Kashkari, he's the Minneapolis Fed president. He said that it's better to over-tighten than not to do enough to tackle inflation in a recent interview that he did. They also don't want to follow the path of Australia and have, 4 consecutive rate pauses and then have to do a rate hike. So they're thinking, let's get it over sooner rather than later, which I've been saying all along. Interest rates should have been at 10% a year ago, and everything would have fallen to the floor by now, and we'd be able to already start into recovery mode. But instead, let's drag this out as long as possible because we want the least amount of pain as possible. So we'll see where the new reports come in and where the rates go from there. Here's something funny that one of my viewers, Scott, sent me. He sent me this little Reddit story saying, is lying a common practice in negotiations? And he's referring to the housing market and the experience working with a realtor. And listen what this says. This is the home seller saying this. I received an offer on my home after the first round of open houses that was over asking price with a waived inspection and solid financing. It was the only offer I received. My agent wanted to lie to the folks who made the offer and tell them we received multiple offers and to please submit the best and final. I rejected that strategy, and my agent insisted that it was common practice in his realty group. I feel comfortable in my decision to not go through with that plan, but was wondering if that strategy really is commonplace. It feels slimy to me. Oh man, it's so funny to read stories like this, guys, because I can 100% confirm that these slimy stories are 100% true, and unfortunately it happens all the time. It's rampant, at least here in Miami it is. Maybe in other areas where people operate with more integrity, maybe it's not so common. Maybe there's a few people who do it, but it's not common practice. But like here in Miami, for example, it's totally common practice. In fact, I've even had sellers ask me to do that before, not even me suggesting it to them. And it's just crazy, that they want you to lie to people and tell them you have a multiple offer situation to FOMO them into spending more on their property. And it doesn't really matter where the idea comes from, whether it's from the real estate agent or the home seller, because sometimes it can come from either side, guys. Neither side is innocent in this, let me tell you. But it's pretty sad, that this is what things are coming down to. Like, people can't be honest with each other anymore. Everybody's always trying to scam everybody or sue everybody. And it's like, what is going on, man? What kind of world are we living in when this is becoming commonplace, I think it's ridiculous, and it's really sad that, our society is devolving down into this right now. And really, at the root of all of it is greed, Everybody just wants to make more money at the expense of somebody else, is what it comes down to. Nobody wants to work hard for anything or earn it legitimately. Everybody wants to find some sort of loophole to scam or screw somebody over. And who's a perfect example of that all the time is our government, because they are on the verge of yet another shutdown. In fact, they could be shutting down by as soon as November 17th again if they don't agree on the budget. And it's like the same thing every single year. We see a couple of threats of these shutdowns, and it just gets old, like, because of greed and because of wanting to be constantly in control, these guys that supposedly work for us can't agree on a budget that works for everybody. And the reason I'm bringing this up is because the advice from the Realtor Association is, hey, if you need flood insurance right now, you should definitely get that flood insurance before this potential government shutdown, because if you need to get insurance after this November 17th date, you might not be able to. And for once, the Realtor Association is saying something I actually agree with, and saying that, it's not too soon to panic over this shutdown, but it's good to be prepared for one. And I agree, guys. I agree with that statement when it comes to everything. It's good to be prepared for different situations that might come up, right? A government shutdown. Oh, I need flood insurance. Oh, there's a coming recession. Maybe I shouldn't have credit card debt. Maybe I should have some money saved in the bank. Home prices are going down. Maybe I shouldn't jump into a bidding war right now. Common sense stuff that people are not paying attention to. You had just so many people jump into these situations like bidding wars and, buying overpriced cars, buying a house that has a home office because I'm going to be able to work from home forever, and basically banking on all these trends that were temporary that are all being reversed right now. And I think it's kind of laughable that so many people thought that all these things were just going to stick around forever and that nothing was ever going to change. Because the only thing that is guaranteed in life, if you ask me, is change. You're guaranteed to see change. And one way we can measure this is Zillow just noticed recently, when they scan through all their listings, the keywords that are found in the listing, like a Zoom room or a cloffice, which is basically a closet converted into a workspace, those search terms appeared in far fewer listings in the first half of 2023 than it did in the first half of 2022. And what this means is that less and less people are interested in a property because it has a home office now, because so many people have been called back to the office and are now no longer able to work from home. And there's a reversion back to pre-pandemic features that people thought that were more important than a home office, like the number of bathrooms in the property or the quality and size of the kitchen, things like that make a larger impact on living the day-to-day in that home. And one lesson that we can learn from this is we're starting to see overall a reversion to the mean. Well, what does that mean? It means, reversion to the mean means that we're starting to see things go back to the way they were before the pandemic, in terms of people working from home, now going back to the office, in terms of people are no longer going bonkers and paying crazy over asking prices for homes, at least in not most areas, and waiving inspections and contingencies and all this stuff. That's basically over. And the interesting thing is that even though people are returning to the office most of the time because they have to, sometimes voluntarily, commercial real estate is still in major trouble right now. We've already seen a pretty decent pullback from lenders willing to lend on commercial property, but it's getting worse. So far this year, there's been about $28.2 billion of loans converted into commercial mortgage-backed securities that have been issued, which is the lowest amount that we've seen since 2011. In 2023, the overall commercial debt market, including banks, commercial mortgage securities, and non-bank lenders, rose less than 1%, which is also the lowest increase that we've seen since 2014. And what this suggests is that nobody wants to touch commercial property right now when you're talking about lenders. Nobody wants to give a loan on this. And there's a lot of different reasons for it, guys. Number one, the valuations on these properties are completely upside down right now. In some areas, these buildings have lost 50% of their value from now compared to like 10 years ago. That is a major crash in commercial office buildings right now. And on top of that, even for the ones that they can kind of figure the value for, one thing that's uncertain is rents. They don't know how much they can bring in right now in rents because the demand for these office spaces is still in limbo. Because even though we have seen a big reversal in the work from home trend, it's not like everybody that started working from home is now back in the office. No, there's a lot of companies that embrace the idea of working from home forever now, and the ones that are requiring people to come back, most of them have some sort of hybrid work schedule, so the people don't need to be back in the office 5 days a week anymore, which also lowers the demand for office space. And the more vacancies that go up, the less that they can charge for this commercial office space. Just like we talked about in yesterday's video about how WeWork just went bankrupt, guys. What do you think that is? It's commercial rents going down because nobody wants to go to WeWork anymore. Everybody wants to work from home. The people that can work from WeWork are working from home. And the amount of people buying commercial buildings right now is down tremendously. And in fact, it's down 53% from a year ago. Tell me that's not a crash in commercial real estate? I don't know what is, guys. And this is probably just getting started. This is going to continue to be a problem as these interest rates remain higher for longer. And there's just so many obstacles being thrown at us right now. One thing I just hope that everybody gets from these videos is awareness. And the more that you're aware of all these problems that are being thrown at us right now, the better you're going to be able to plan ahead for the future and make sure that you're going to be able to survive this upcoming recession or current recession, whatever your current view is on it. So if you guys enjoyed this video, make sure you subscribe to the channel. If you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.